Good afternoon, everyone. Thanks for joining us today. We have an update with Peter Londa, CEO of Tantalus Systems. Tantalus trades on the TSX under the ticker GRID, which is a great ticker because they specialize in smart grids. So as always, this presentation will contain forward-looking statements. If you'd like to know more about those, you can find them on the company's disclosure on their website. And this whole session will be a Q&A, so feel free to enter your questions at any time in the box at the bottom, and we'll get those addressed. For those of you who may be new to the Tantalus story, I would recommend checking out some of the previous webinars on the Adelaide Capital YouTube channel, because this one really will be an update and a conversation about some of the new exciting opportunities. With that out of the way, I'd like to introduce Peter Londa. Hi, Pete.
Deb, how are you?
I'm good, thanks. How are you?
I'm doing well. Thanks for having us today.
Yeah, no, it's exciting. So yeah, maybe you can give us a quick overview of what Tantalus does, and then talk a little bit about some of the exciting things you're working on.
Yeah, if it's Deb, maybe bear with me. Let me maybe bring up a slide or two here to assist in that discussion and just to refresh everybody's memory of who we are and what we do. So let me know if this comes across all right.
Looks great.
Okay, good. So as Deb, as you'd mentioned, we're a technology company traded on the Toronto Stock Exchange under the ticker symbol GRID. And at the highest level, we are building a technology platform that is helping utilities digitize the delivery of electricity, and in some circumstances, digitizing the delivery of water and gas. And what I mean by that is helping utilities be much smarter and much more efficient and reliable on how we all consume electricity in our homes or businesses, what the quality of the power is that we receive, and more importantly, what the reliability and cost of that is. So today we are a pure play technology company that offer a comprehensive platform. We are working and selling our capabilities to now over 260 utilities, most of which are in the United States, some in Canada, and some in the Caribbean basin. A lot of what we are doing is helping utilities not only prepare for the electrification of everything, most notably the electrification of transportation and vehicles, but also sort of achieving and ultimately addressing regulatory and state and local political mandates for the utility industry to decarbonize. And so if you just think about that, electrify everything and decarbonize the power industry, right? Those are compounding and conflicting mandates to ultimately increase the amount of power that needs to be delivered and simultaneously reduce the carbon footprint associated with that power. So we are in the thick of helping utilities address both the need to increase the amount of power they're delivering to power our vehicles and simultaneously reduce their greenhouse gas emissions. So there is a heavy component of helping the utility industry meet and report on a variety of ESG initiatives. In terms of where we have been making investments and have shared publicly in going public last year, 2021, we are seeing a consistent effort by utilities to really upgrade their metering infrastructure. We don't build meters, but we digitize those meters with edge computing, software, and analytics. And so we are seeing a wave of utilities really try to go from first generation technology that in some circumstances is a decade or 2 decades old. And so we are in the thick of that. We also are, through announcements and through investments, bringing new capabilities to the market to help utilities not only address metering, which they've been doing for years, but most importantly, go behind that meter and prepare for the visibility and ultimately control of EV chargers, solar inverters for rooftop solar installations, power walls, or other smart appliances that we as consumers are either already deploying and adopting or over the next 5 and 10 years will be. So a lot of good drivers there. We continue to reiterate the guidance that we've already provided on our revenue profile. We report in USD. We are expecting 20 to 25% growth year over year. And to get to a revenue profile of $38.5 to $40 million this year. Of that, roughly slightly over $9 million today is recurring in nature at very high gross margins. We are, within our technology solution, a combination of devices, intelligent devices, software and analytics and services. So our blended gross margin remains in the upper 40th percentile. Been consistent so far this year, despite a lot of inflationary pressures and supply chain constraints that are impacting other businesses. So we've continue to drive towards growth of the business, making investments to expand what we can do and increase the total addressable market opportunity in front of us, and do that in a way that we can deliver sustainable and profitable growth for our shareholders over the next several years.
Can you elaborate a bit on some of the investments that you're making into new technologies?
Yeah, so if it's okay, I know we were thinking Q&A, but maybe I can point to a few pictures here that might help. So this is in our investor deck, so apologies. Let me just build this out. So if you think about the modern home, upgrades to existing homes or construction, and to that end, this is applicable in a business, commercial or industrial plant as well. Right, what we're witnessing is all of these new devices, whether it's solar adoptions, EV charging and electric vehicle adoption, power walls, or already widely adopted smart thermostats, Nest, Ecobee, things like that. All of those devices generate data. All of those devices, more often than not, align to apps on people's smartphones that they control. I'll personalize that. I've got Nest thermostats in my home, and I've got an app on my phone that's right next to me. And with the push of a button on my iPhone, I can change the temperature at my home all the way back on the East Coast, even though I'm currently in Vancouver today. And so utilities, right, their business model has been initially focused on the delivery of power to substations without a lot of visibility behind the substation. And most utilities in Canada and the United States today, I'm sure folks on this call have experienced it, and when the power goes out, it's the rare utility that knows before the consumer knows, meaning most utilities are still dependent on people calling to a 1-800 number to complain that they've lost power. Right? So utilities over the past decade or so with our technology have been investing to get visibility to at least the meter. Does the meter have power? How much power are we consuming? How does that power change as our consumption patterns change and investments in the home change? And so, right, they've automated billing and they've automated outage management. So the utility, in some circumstances with our technology, well, all circumstances with our technology and some of our competitors, right, have visibility to the meter. From our perspective, where we've been investing is providing the visibility and ultimately the command and control behind the meter. And so what we've been working on specifically is we call this the TrueSense Gateway. We've got a number of press releases tied to this, and we are getting closer to a point of actually putting some of these devices into the field with utilities to start field trialing. But what you're looking at is right, that's not what you're seeing is not actually what gets shipped to a utility, but this is the guts of what we call our TrueSense Gateway here at the bottom of the screen. And this device would sit between the meter socket on the side of the home and the electric meter. And you can think of it as like a collar that goes in between the two. And what this device is going to do for the first time is address a number of sort of converging initiatives. How does a utility just get smarter about their metering? Right? That's their cash register. How does a utility start to better track power quality, as we all expect power to always be on and always within certain parameters that our electric appliances inside the home can support? How does the utility start to gain visibility when I'll personalize, purchase an electric vehicle. And what does that mean for the utility, both in terms of consumption, that ties to a bill, power quality, it ties to assets that they have to manage to continue to deliver power to my home, right? And fluctuations in things called voltage and current, which are two metrics. So this device is specifically geared to not only continue to differentiate what we do with helping utilities get smarter about their metering, but it simultaneously becomes a power quality measurement tool at a different threshold and level than what utilities have had today. And embedded in this device, you'll see sort of on the backside of this green circuit board is a utility grade connectivity, either through the power lines into the home, the electric outlets, or through a utility grade Wi-Fi protocol. And what I mean by that is not necessarily Wi-Fi that we all use every day for Netflix or for our own automation inside our home, but an actual 802 dot fill in the blank protocol that the utility has direct access to from the meter into the home to securely connect to an EV charger, an inverter for solar panels, or a power wall, or a smart thermostat that might already exist. And the reason why I reference utility grade and utility secure is because it's the first time in the market that a utility will not only be able to go to the meter, which some utilities are already doing, but from the meter into the home and comply with emerging standards from a cybersecurity perspective to bring data from a consumer application, an EV charger, or a consumer device, an EV charger, all the way through the meter, through the firewall of the utility, and into mission critical systems that the utilities rely on every day to deliver power. And so where we get very excited is we think we have a first mover advantage here. We have been designing this device now for over 18 months with a collection of both existing utilities that we support and prospective utilities that have never bought anything from Tantalus but are on our advisory committee to build and design this device to really meet four specific needs around next generation AMI metering, grid optimization. Some of you will have seen press releases around our Tantalus Grid Reliability Analytics tool, TGRA, our artificial intelligence enabled data analytics around power quality. So we're pulling power quality measurements from this device to further improve the capabilities of our analytics tool that are in the market today. The ability to actually connect to and start to control an EV charger. And for about 20% of the United States is start to, through utilities, electric cooperatives and public power utilities, is start to use this device to power the routers and the optical network terminals that will enable broadband services into homes and communities where broadband doesn't exist today. So we see the utility industry as sort of at this tipping point and ultimately driving urgency that drives revenue and profitability for Tantalus on the convergence of these four key issues that are all hitting the utility at the same time. How do they ultimately upgrade metering? How do they get smarter about power quality and what that means for transformers and power lines and assets that are aging and under pressure? What is the true impact and how do they a utility manage electric vehicles? Not just one, but right, aggregated on a block, in a community, at a city level. And for certain utilities in the United States, how do they step in and start to deliver broadband services with hundreds of billions of dollars behind it from the United States government, federal and state level, to really try to fill in the pockets across the United States where broadband is not readily and affordably available today. So this device is one device, multiple value streams to the utility. And as we shared in our Q2 earnings call, we've sort of identified about $500 million, if not more, of addressable opportunity with this device that we're designing with utilities. I think the available opportunity is magnitudes higher than that. And as we get smarter and start to put this into the field, we're looking forward to some very positive announcements that will continue the growth trajectory of this business. So I think the pictures, I'm sorry to go to slides relative to Q&A, but the picture sometimes speaks 1,000 words, and actually physically seeing where we've been spending money on the hardware side, where we've been spending money on the software side through analytics and through our acquisition of Cooperative, which is that protocol conversion, picking up data from all the different types of EVs, power walls, and inverters, and having that software and the analytics embedded as applications on this physical device. So it is a unified application that will drive revenue from hardware and recurring revenue from software and analytics moving forward. So we're really excited about this and making some great progress since our Q2 earnings call.
Hey, can you walk us through the process and timeline for commercialization of this device?
So I think we'll share some of that in the next couple of weeks through our Q3 earnings call, Deb. So I'm just sensitive of what's already public. What we have shared is our view that this is commercially available in 2023. I think more specifically, we've referenced the second half of 2023 with where we are and sort of the anticipation around alpha and then beta, which we've also communicated previously. Our expectation is these devices are starting to get into the field, or at least with utilities, if not by the end of this year, then certainly early next year for field trials. And so, as we make more progress, we'll provide updates to investors, but this is more near term than it has been, both in terms of its delivery and in terms of what it means for us from a financial perspective as we start to turn the page here to 2023 and start looking beyond that.
Okay. And I guess my other question is, I like examples because they help me understand things a little bit better. Could you maybe give us a real life example of how this device would be helpful for a utility?
Yeah,
whether
sure.
you want to use a storm or an EV charge, or you tell me what the best case study to understand this would be. So
today we have, I'll give you an example on where we cross all four of these items. We have historically been a leader in the United States within the utility industry for utilities that have deployed fiber networks all the way to homes. We have a lot of material on our website and through other webinars where we use a case study with the utility that is based in Chattanooga, Tennessee. EPB is the name of the utility. In the 2008 timeframe, they got funding from the United States government when Barack Obama was president and started to work towards a path forward after the financial crisis that hit in the 2007-2008 timeframe. And one way to sort of help the U.S. economy was through some stimulus grants that were geared towards infrastructure. Not too dissimilar to what we're seeing today unfold, actually, just orders of magnitude different. EPB was a recipient of funding to actually lay fiber across the city of Chattanooga. And in conjunction with that, approvals in Tennessee, they were able to start actually delivering broadband services to consumers and residents across Chattanooga. They worked with us long ago to develop our first generation of what you're looking on this screen. It was our first fiber to the home product. And what it allowed the utility to do was leverage a fiber node all the way to the home to connect a meter to that fiber network to really almost break data streaming of data from that meter around consumption patterns that help for billing, obviously, but also what was happening inside the home. And also to power an optical network terminal, it's kind of the device that connects to a router to deliver broadband services. And so the first generation of our fiber to the home offering with EPB was on the left two components here. AMI, very robust, real-time data effectively that they could use to better automate the distribution grid itself and to allow the utility to deliver broadband services into the home. So EPB, the case study that's on our website, is they ultimately generated and through their broadband offering, gigawatt service, they got about 50% of the market in Chattanooga to start to purchase broadband services from the utility. They competed head-to-head with Comcast, big cable provider nationwide or broadband provider nationwide. They also upgraded their metering capabilities with our device. That led to enhanced automation and some self-healing capabilities across their network by leveraging this high-speed fiber network. Over time, Chattanooga publicly has announced that they plan to be the first 25 gig city in the United States. They are consistently thinking about how to upgrade their capabilities. And as we think about what we're working on is not only are we addressing the existing sort of first generation technology of true comprehensive AMI and broadband, but for a utility like EPB, I'm not saying this is EPB's plan, but as we think about case studies, here's a future case study for Tantalus. A homeowner goes out and purchases an F-150 Lightning vehicle. That F-150 Lightning battery, and I'm in the market. I'm waiting for mine. I have a reservation, so some point in the next few years, Ford will deliver it to me. The battery in that vehicle, the long-range battery, is a 19 kilowatt hour battery. What that means for people who don't have an appreciation for power, it means like adding 6 central air conditioning units on the side of my home, like 4-ton AC units. That is a significant drain of power that the utility is going to have to deliver as soon as I get my F-150 and plug it into the charger for the first time. I have no obligation as a homeowner to notify my utility that I've just purchased an F-150 or a Tesla or another Ford vehicle or any other of the car manufacturers that are aggressively migrating to bring price points down. So it's not just performance vehicles and for those that really can afford the Tesla. I have no obligation, though, as soon as I get that F-150 Lightning to notify the utility. So what does that mean for the utility if they don't have automation at the meter, this device? The only way that they find out that maybe I have an F-150 is they start to see my power consumption increase. Some utilities with our technology will at least be able to say the power is increasing from this point of time in the day to this point in time of the day. And through some of our analytics, we could pinpoint today without this device, right? That's indicative of the charging protocol of an electric vehicle, right? You can kind of statistically back into that, but the utility doesn't know. And so the case study here is if a utility purchases and deploys this technology, not only do they get the left-hand side of this page, advanced AMI and broadband, which we've been doing for some time to the extent the utilities can deploy broadband, but they also start to get the right side of the page here. Immediate visibility through connectivity that an electric vehicle a charger has been installed. From there, utility can proactively reach out to me and say, Mr. Londa, they'll be polite, my last name, and say, we're aware that you've purchased an electric vehicle. Would you be interested in entering into rate incentives, time of use rates, or receive a $50 credit every month if we, the utility, can potentially change when that vehicle is charging based on what's happening across the distribution grid? So example, if I were to live in California, heat wave hit. This was national, if not global news, certainly North American news, right? Not too long ago, in August, the state of California was announcing expected blackouts because of a heat wave that was hitting not only just Southern California, but the entire state. And so the utilities across the state and the governor of the state were making outreaches to homeowners and to businesses around conservation. Please don't, turn your air conditioner off. We're trying to avoid blackouts. In that circumstance, with our device and our software, a utility could proactively make an outreach to me as the owner of an F-150 in California and say, Mr. Londa, we are anticipating a heat wave. We are trying to avoid blackouts. Can we either pre-charge your vehicle? Can we postpone the charging of your vehicle? Can we trickle charge, meaning reduce the voltage to the charger so it still charges, but it just takes longer to conserve power? Over time, with additional software and this device, send a signal to actually discharge the vehicle in a coordinated fashion across the entire footprint of the utility to discharge batteries from multiple vehicles all at the same time. Again, as a path for conservation when we get weather crisis, which is happening more and more frequently across California, Texas, and frankly, the entire United States. It's even happening in the eastern provinces of Canada with the first hurricane that's hit there in a long time. And so that's a use case where a utility would have visibility and then the control to manipulate or adjust what's happening with that electric vehicle. Simultaneously, Deb, if I were to add solar panels to my rooftop, right, not only does the utility have improved visibility as to when my solar panels are generating, what does that mean for reducing consumption at certain times of the day, but between an EV charger, a solar panel, and potentially a power wall, and we see this aggressive marketing with Tesla, buy the vehicle and here's a discount on a power wall, right, to make sure you can always charge your vehicle when you want to. Don't worry about the utility. That all changes the voltage and the current inside the home. And so through grid optimization, artificial intelligence, and data analytics, we can really give the utility that increased visibility of what's actually happening across their entire footprint. And what does that mean for the reliability of power through the grid? So this is, from what we understand, a first to market that covers all four of these issues in real world circumstances. And we don't have to be dependent on how quickly EVs get adopted, but ultimately they are going to get adopted. And when they do, how do we make sure the utility's in the best position possible to be responsive and ultimately plan throughout their entire system? That's what we're working on, and we're doing that in partnership with a number of utilities that have been on the advisory committee to help us design this device and solve those specific problems. Sorry for being long-winded. I'm passionate about it, but I hope that's a real-world case study that crystallizes this for you and others.
No, I think it's a really exciting product and an exciting time for the company. Obviously, it's been difficult for us to get that message out over the past year and a half, 2 years that we've been working together, Pete. And I mean, we were talking about the price of lithium earlier this week and how that's been such a bright spot in the Canadian markets, and how do we translate what's going on with the lithium market into, this is also really positive for Tantalus. And I know it's something that we've struggled with a bit, but maybe you can give your thoughts around, the EV revolution and why you think Tantalus is so well positioned and why investors should be looking at this as a potential way to play that trend.
Yeah, I think there are a couple components to it. I'd say from just interacting with investors, and I think trying to keep our ears open and learn from each of those interactions. I think there's a perception that utilities, it's an idiosyncrasy, right? Utilities are, by definition, risk averse. They tend to move slowly. And so I've seen this over the past, I guess, since I got into the utility sort of smart grid industry in 2008, almost 15 years now, a perception that since utilities move slower, the adoption curves for companies is slower, and as a result, the financial profiles take longer to materialize. It's true with respect to utilities historically moving slowly. What I would say is they move deliberately, because at the end of the day, they are responsible for ensuring that whatever decisions they make or whatever investments they make ultimately, right, don't disrupt the flow of power to all of us. And other than water, you could argue, and clean air, notwithstanding smoke where we are today in Vancouver, in this area. But right, electricity is probably one of the most critical commodities to sustain society. And so utilities look at it in that capacity. With that said, when you think about broader economic challenges at the macro level, utilities are also not recession proof, but they consistently are making investments regardless of what's happening in the broader macroeconomic environment. And they are consistent in paying. So it does take us some time to convince the utility to adopt our technology. This is a new product offering or others that are already existing. But once we lock into that utility, right, the average life that we have a utility is 2 decades. Right? The deployments are on average 12 to 15 years, and more than often migrating from first generation to next generation, like this device that's still on the screen in front of us. And our retention rate of our customers, not on an annual basis, but over the last 2 decades, is 99.4%. So once we lock into a utility, we're there. That's leading to not only revenue up front, but then the growth of the recurring revenue. So I think in my mind, there's one element of, is the utility a sexy customer compared to consumers that might be more viral in their decision making? From our perspective, where I need to do a better job of, and where I think there's great opportunity for investors, is there is a real utilities move deliberately. But we're at a tipping point. You cannot argue that electric vehicles are just a California thing. They are being adopted everywhere. You cannot argue that car manufacturers aren't committed to and being incentivized to migrate their fleets from gas guzzling, fossil fuel, greenhouse gas emitting technologies to electric vehicles. And the price points and range of those electric vehicles is expanding quickly. Right? This isn't just for the wealthier portions of society that live on the 2 coasts of Canada or the United States. This is mainstream. And while you could argue, well, the adoption rate's not going to be 5 or 10 years, it's going to be 15 or 20 years, I'll let investors make that own conclusion or draw their own conclusion. But the reality of it is every single electric vehicle that's purchased has an impact on the reliability of the grid in some capacity, whether that's at a meter level, a pole top transformer level, or a substation level. And the 3 distinguishing factors there are, is it 1 EV? Is it 10 EVs? Is it 100 EVs? I don't think we have to. I think from that perspective, there is a tipping point here for utilities, and we're seeing it in terms of pipeline, order conversion that we've communicated through the first 6 months, and what we'll continue to report on, and certainly now the activity around this effort and this product that we're designing. Right, the utilities are a tipping point. They have to start upgrading their systems. They've not only got to prepare for EVs, but in many states across the US, there are already mandates to reduce greenhouse gas emissions within the next 10 years. That is industry altering for the utility industry. And so the investments are increasing. The United States government and state governments are putting their money where their mouths are, with hundreds of billions of dollars to motivate and provide utilities access to capital to get it done. And so I think we're in a great position supporting 260 utilities, having a track record of success in deploying solutions, being a trusted partner to those 260 utilities. And I think the greatest statistic beyond the financials of this organization is a 99.4% retention rate over 20 years of the customers we support. So again, passionate around it. I think we're in a great spot. And I think the utility industry, you're talking about effectively another industrial revolution within the utility industry on the most, if not first, second most important commodity that we all rely on every single day. So that's where we get excited about it and where we see there's great opportunity for Tantalus and for investors.
One of the other things I like about Tantalus is it's agnostic. Like, it doesn't matter if Tesla is the #1 EV manufacturer or if Ford overtakes them or whoever it is, whether it's lithium ion batteries or whatever nickel metal hybrid, I don't know, all my batteries. It doesn't matter if it plugs into a wall. you're a beneficiary of that trade. So, I just think
if it plugs into a wall, it needs electricity. Mm-hmm. That is the underlying component. So again, it's foolish for me to argue which of the types of minerals are going to be the lead in batteries. And again, there are smarter people than me that can have a theory on that. I don't care. We are agnostic. If there is a battery, it needs power in some capacity to be charged. If there is a solar panel, you still need backup power because the sun doesn't shine 24 hours a day across North America. And so every single one of those investments and the success, whether it's lithium or something different, in our opinion, agnostic is the right way to put it, Deb. We just want to see success. We want to see adoption because it impacts the utility. And we think we're the right trusted technology partner to continue to gain market share and continue to drive revenue. And I noticed a question that came in around, is the device in front of you here proprietary? There are a number of ways that we are protecting this. And I think there's a combination of not only the design and the expertise around the mechanical design of the device, but there is also a ton of proprietary components to the software. And that's part of the acquisition that we made. And to your reference of agnostic, I don't care if Tesla, if Ford, if Toyota, if Porsche, if GM is the lion's share of EVs. All of those chargers, and each one of them, each company, right? They're kind of partnering with the charge points and some of the larger EV infrastructure companies, but they're also starting to bring out their own EV chargers, much like sort of the Apple and the IBM PC war in the 80s and into the 90s. They spoke completely different languages. What we've worked on and what we've acquired in Congruitive and what we're continuing to invest is a protocol conversion software tool that'll sit on this device. It is substantially proprietary, and it will be able to communicate and convert the language of a Tesla charger versus a charge point charger versus a new V school bus charger, or fill in the blank of other EV charging infrastructure companies, or microgrid companies and microgrid gateways and microgrid controllers. Our goal is, I don't care if it speaks Spanish, Japanese, German, English, Canadian, or Spanish, right? We can convert all of those languages from all these different devices across this platform that's in front of you today. And most importantly, comply with IEEE cybersecurity standards to bring that data in a unified fashion and provide interoperability across those devices to the utility. So if you believe in EVs and you believe in storage, you have to believe and conclude that it's going to have an impact on the grid. And I disagree that electric utilities disappear. I think they evolve because at the end of the day, we can't always just rely on sunshine and storage to solve problems and deliver power to our homes and our businesses. So I think the electric utility has a place, and we're working on the technology to make sure they have that place, and most importantly, ensure that it's reliable in terms of delivering power to all of us as we change our behavior patterns and we start to invest in some really cool technology like EVs. They're fun to drive. Right? I just rented a Tesla on a business trip. First time I've driven one. I don't know if I'd buy one, but I'll tell you this much: it's a lot of fun to drive.
Well, I think you're still waiting for your F-150.
That'll be my electric vehicle of choice for sure.
6 air conditioners.
That's exactly right.
Okay, well, I don't see any other questions. I think you've done a good job of laying out the opportunity ahead of you and the product that you're developing and the reason why you're developing it. I guess in terms of just general market, the share price has been under pressure, both macro and as well as, some selling out there. Maybe you can talk a little bit about some of the catalysts going forward and a pathway to hopefully have that share price rebound.
Yeah, it's been a big transition for us internally from being privately held for so long to public. And I'd say we are very conscious of what's unfolding with the share price, and actively spending time and money and allocating resources to try to build awareness and find the right set of investors to support this company. To that end, through the investment banking advisors that supported us when we went public and did our follow-on financing, I think we identified a great group of investors, particularly institutional investors, to support this company for an extended period of time, and really that collectively took sort of a 7 and 10 year investment horizon approach in looking at us. We didn't pursue, nor did we attract a lot of retail. And so the float of our stock hasn't been so substantial. So I think that's one impact, and it's a double-edged sword. A lot of institutional investor ownership, stable, the same token, not necessarily actively trading. So as we see some selling, or as we see some retail that's come in and moves out based on what they're trying to do, or tax planning, or fill in the blank, right? That creates the downward pressure on our share price, which just fundamentally, it doesn't align to the financials and the substance of this business, in our opinion. We can't control, obviously, where the share price moves. All we can control is our performance. We have made unified investments to bring the TrueSense Gateway device to market, and we're getting closer and closer to that. We have acquired a software company that'll be the application on that device that will drive incremental scale of that software as well as recurring revenue. And we've been investing internally on our own R&D, on our AI-driven data analytics around power quality. So all of those investments that we've been making since we went public all sort of tie very closely together within the approach that we're trying to take to help utilities. I think we'll have continued success towards recognizing the benefits of those investments. And as we do, I'm hopeful that investors, similarly to the ones we've already attracted to this business, look at us as a long-term, multi-year compounding growth company that is at the forefront of a tipping point for the utility industry for the next decade, if not longer. And so we're working hard, as you know, on trying to build awareness. We're working hard on trying to find ways without diluting our shareholders by going out and raising more money. We're trying to find creative ways of increasing the float within the ownership mix of the company that exists today. I have to believe that as we continue to demonstrate success, as we continue to deliver on the 20% growth or more this year, as we continue to see the fruits of the investments that we've been making that can really be milestone events for the company, that, and shrewd investors will identify that and frankly see this as a tremendous buying opportunity relative to where share price is. And we publicly disclose insider buying. During every period I've been able to buy individually, I am buying stock. When our blackout period expires, I'll look at it. But in my opinion, as an investor myself in this company, I'm as a CEO, so I'm jaded, but and disclose, but I'm buying stock and have been as the price comes down, because I see it as a great opportunity.
And you're in blackout currently pending your Q3 financials?
Our blackout periods run from the end of the quarter until we announce our Q3 results, which will be mid-November. And, we'll set a date for our Q3 earnings and publicize that in the next few days, so investors can get that on their calendar and prepare for an update on the financial performance through September 30th of this year.
Okay. I think we've covered almost everything. The one thing that we didn't touch on is that Planet Microcap put out a publication this morning that included a white paper from Tantalus on the utility of the future. Maybe you could talk a little bit about what that means. And if anyone would like that publication, feel free to reach out. I can send it over to you.
Yeah, I mean, as a tech company, micro, small cap, depending on how you define that, we've been trying to obviously increase awareness on what we do, who we are, and the opportunity that's in front of us, and frankly, the performance to date on delivering in a number of ways to what we've sort of communicated to investors over the last 18 plus months. And so Planet Microcap identified Tantalus as a compelling opportunity through their research. And we were really fortunate, and I think we're honored and humbled to be highlighted in their most recent publication for this quarter. And we'll look forward to hopefully tapping into their distribution as a way for us to really expand awareness, particularly in the United States. A lot of what we've done is focused up here in Canada as a Canadian headquartered and TSX listed company. But I think the Planet Microcap audience, from what we can understand, is it goes beyond Canada and goes into the United States and even into Europe. And so it was great for their team to find us, and as we got to present to them, honored that they highlighted us with our Utility of the Future article, because I think it aligns to a number of long-term investment theses that they are presenting to their investor community.
Great. Well, I don't see any other questions, and I don't have anything else. Pete, is there anything that you wanted to talk about today that we didn't touch on?
Deb, I've probably overstepped my bounds on time.
No, you're good.
So I appreciate your effort to facilitate this. Thanks to those that have joined and listened to the recording. And as I said, I think we've been executing quite well despite a really challenging broader economic business environment. I think investors will continue to see that through our Q3 results. And certainly as we turn our attention to year end and then growth trajectory for next year, I think we're really starting to see the fruits of the labor and the investments that we've made to help utilities, particularly those that are proactively really planning and starting to line up dollars to deal with the onslaught of EVs and how that impacts power quality and their metering responsibilities. So I think we're in a really good position for it.
Well, it sounds like an interesting time for investors to be looking at Tantalus, both from a macro perspective, that tipping point potentially coming, as well as a share price perspective, being at a fairly low valuation at this time. So if anyone has any further questions or would like a call with Peter, please feel free to reach out, and appreciate everyone's time this afternoon. Thanks, Pete.
Yeah, thank you, Deb. Nice to see you.
Nice to see you too. Bye, everyone. Have a good afternoon.
Bye.